Hi, this is Anthony. Welcome back to my show. Remember, I'm not a financial analyst. I'm not a financial advisor, just somebody interested in investing in stocks in the stock market and who's been looking at it actively since 1987 when I was in high school and we had a 22% drop in one day. So, anyway, I do a lot of videos on stocks as well as other things, unsolved mysteries and things like that. So, yesterday I was watching, just randomly found a channel from Australia where a couple guys look at Australian and US stocks, um, undervalued stocks, and this is one of the ones that they came up with, American Axle and Manufacturing Holdings, and they term this a boring stock. And I think that there are a lot of stocks that could be described as being boring that grow consistently. Sometimes they pay dividends. But let's take a look at this one because this sounds pretty boring and it sounds like potentially it could be a great one. Although we see it was down 6.5% on Friday. We have to remember that a lot of stocks were down on Friday, quite a bit. 5 days, it's down almost 14%. And they make axles for auto manufacturers. 1 month, they're down 12%. 6 months, they had a pretty good run, but they started out at $3.10. And so they're up 71.5% roughly for 6 months. Year to date, so the past 10 months, they're down 7.64%. Not very good when a lot of the market's up. 1 year, they're down over 13%. Not good. 5 years, wow, they're down 22%. Not at all good. Why would you want to invest in something like this? I don't know what these guys see in it. And then Max, if you went back to 1999, so about 26 years ago, you'd be down almost 68%. Just terrible. Does it pay a dividend? Of course not. The problem with auto manufacturers is there's a lot of competition. People that make parts for them, there's a lot of competition, and there's been a lot of problems in the past with asbestos. I'm not suggesting that that has anything to do with this one because those claims have probably been dealt with long ago. But if you're interested in the auto parts segment, some that might be better, now they're not exactly the same type of thing, but I mean, the whole purpose of investing in the stock market is to make money. These guys may not understand that. I'm not going to mention who they are. Let's take a look at a couple auto parts. Here's O'Reilly. I own 10 shares I bought right before their split. One day they're up when the rest of the market was down. 5 days they're down a bit. 1 month they're down a bit. 6 months they're up a respectable 10%. Year to date up almost 30%. 1 year up same amount. 5 years up 240%. And Max, if you're able to buy back in 1993 for a split adjusted 16 cents, you'd have $102. They don't pay a dividend, but you don't really need a dividend if they're doing that well. Let's look at one of their competitors. AutoZone, don't own it. It is a $4,000 stock for one share. Although some brokers will let you buy fractional shares. They are very similar to O'Reilly, down a little bit for past 5 days and 1 month. 6 months they're up. Year to date they're up. 1 year they're up. 5 years they're up 258%. And Max up 57,000% going back to 1991. So why in the world would you want to, and I'm all for a little bit of speculation, but if you're going to speculate, you know, have a company that is going to go up. Now, they do have a positive PE ratio, so it means that they're making a little bit of money. But, I mean, this is just a junky, crappy stock. And they bought a British company recently. I don't know if it's closed or if they've taken possession of it, but you have kind of a crappy stock buying another crappy company, you're just going to get crap. Even if you don't want to invest in auto parts, Let's take a look at one that I have. I just have a couple shares of this. I think for most people, you should have a long-term time horizon and broad-based growth or index funds. This is the S&P 500 Growth Index Fund. It's similar to the just regular S&P 500, but it kind of focuses on some growth. So there's a little tweaking that they've done. One day it was down, 5 days down. 1 month it's down, 6 months it's up 30%. Year to date up 16%. 52 weeks you're up 22%. 5 years you're up almost 100%. And max, you could have bought it, this particular one back in 2010, so about 15 years, you're up 738%. So again, anybody recommending crap stocks like this probably shouldn't be investing other people's money, which they do in Australia, and probably shouldn't be giving much advice. Again, is it possible there's periods of time if you were able to buy at a low, you could make some money? I mean, 71% is very respectable if you would have been lucky enough to buy back in April and you sold recently. Anyway, I'd love to hear from you. Leave comments in the comments section. I always read them. I respond to them eventually. Hit like, hit subscribe. Check out my other videos. We'll talk to you soon. Thank you so much.